who uses Bing? Who uses Yahoo? Most use Google. Are we going to see the same thing with LLMs? Is there going to be one winner and all the others become commoditized or actually become Ask Jeeves?
Hello and welcome to the Heart of Wealth, your weekly pulse check on the wealth industry. I'm John Schafer, your host for this week. Today on the show, we look at Goldman Sachs' acquisition of NN Investment Partners 4 years on. Also, how funds are valuing SpaceX and how this mega IPO will impact markets. And finally, we explore the halo trade and how this is growing in popularity in reaction to frothy tech companies. Joining me today are two Citywire journalists, Joseph Eden and Jeremy Gordon, and we also have multi-asset investor David Coombs from Rathbones. Welcome, everyone.
Thank you.
Thank you.
First up, let's look at an exclusive story that you had up this week, Joe, that was very popular with our readership, which is inside GSAM's NNIP integration. Joe, could you give a little bit of a sense of the story and what went wrong here?
So I've been looking for a while now at that integration, kind of as a case study of the broader consolidation that's happened across asset management industry and sort of continues to happen. What went wrong might be the wrong question to ask. I mean, any kind of integration, there are going to be some frictions. That is kind of inevitable. Yes, 57 funds have been cut that were NNIP funds. 24 managers at least have gone. But GSAM this entire time has maintained to me that that's perfectly within normal levels kind of for the time period, and it's a usual amount of rationalization. But it's the opinion of some of the former NNIP managers I spoke to that what was sold as a lot of talent integration and collaboration, GSAM instead imposed a mandate down onto the Dutch offices and maybe left them feeling a bit pushed out to the fringes.
Right, okay. And then you mentioned the story that some institutional investors sort of moved away from the merged company. Could you tell me a little bit about that?
So GSAM did not deny that there was a loss of institutional mandates when they acquired NNIP. What I'm largely led to believe is that actually most of that was based on sort of pre-existing conditions they had with GSAM. What is on the other side of that is a lot was sold during that purchase about ESG and that being like integral to the reason why GSAM was buying NNIP. It seems like, or is the suggestion of some, that big touting of their ESG proficiency wasn't enough to convince those institutional partners to kind of update their rules with Goldman Sachs.
David, maybe I'll bring you in here. You invest in asset management companies yourself in some of your funds.
And I work for one, yes.
You do indeed, of course. And perhaps you could get a bit of colour on M&A and how it affects your investments.
I mean, from an investor point of view, M&A is usually, it's kind of a red flag, not to not own, but it makes you very, very cautious as an investor because there's a lot that can go wrong. What are the reasons for the acquisition? Is it because of they have to reduce costs, maybe growth has stalled, they're subscale in certain areas, they've lost talent themselves, they're losing. So why have they done the acquisition? What have they paid for it? How are they going to blend those two cultures together? So overall, I would say it would normally be a complete review with probably towards the downside, as in thinking, do I still want to be invested?
Yeah. Moving on, I'm going to be slightly self-indulgent and highlight one of the stories I wrote this week that looks at how different funds are valuing SpaceX. And it seems the consensus here of the valuation that funds are putting on it is around the 1.25 trillion mark. And maybe, David, I could get a bit of comment from you on how all these mega IPOs coming into the market will affect the market. I mean, where's the money going to come from?
I mean, yes, we've been discussing this at some length, as you can imagine. One of the things that really concerns me, and I'm a multi-asset manager, not an equity manager, we do buy equities obviously, is the hype and noise around these. And to your point, who's going to raise the money? Well, the passives will.
Sure.
Because they're going to be big, whatever, even if they disappoint on day one, they're going to be big constituents of the indices. And so they're going to draw a lot of passive flow. And we don't quite know, the scale of that, but given the noise and the hype, they could go to big premiums. They're probably going to be priced to go, because can you imagine your investment bank and you overprice this and it comes in 10% below? Your reputation is going to be
egg on face there.
Yeah, you guys are going to have like column inches across, right? So yeah, they're going to be priced to go, I suspect, and create this huge noise. And we are actually questioning: do we want to play actually in the primary market? Do we want to wait till it settles in the secondary? I think of all of them, and I think SpaceX, the moat is a little bit more obvious to me in terms of the technology and the revenues already. I think there'll be a lot of hype. Musk's involved, right? So this is not going to be quiet. But I think SpaceX, at the moment, the way we look at it, is the one we're doing the most work on.
So do you think the valuation is justified there?
It's very difficult to say. Because I think, again, there's a lot of hope priced in.
I suppose something I'd like to ask David is, once upon a time, private markets funds, people just locked their money up. Now we have evergreens funds where they could be redeeming, based on what the NAV is. Do you think that's going to set the stage for more controversies around how funds value assets?
Yes, that is quite a topical question at the moment. It's wider than just the SpaceX. The whole AI disruption story, which is driving the volatility in the market, that many investors can't see at the index level, because the index seems relatively quiet actually, and probably up here today. But below the line, the dispersion of returns between sectors, between those sectors that the market is shooting and saying, you're disrupted, you're Kodak, and then you've got the AI winners, which are typically cyclical stocks over the long term, are now being traded like long-term secular growth stocks. So we're seeing huge turbulence in the way the market is rating. And all these AI future earnings are highly speculative. And we also don't know who's going to win. And if I draw an analogy, who uses Bing? Who uses Yahoo? Most use Google. Are we going to see the same thing with LLMs? Is there going to be one winner and all the others become commoditized, or actually become Ask Jeeves? And I'm being slightly flippant, but think about the capital being invested into these LLMs. Will that ever actually draw a profit?
I think this might bring us on to what we want to speak about next, right?
It does. It moves us quite nicely onto our final story, which is about the Halo trade. Obviously, a new acronym that's come out recently, which stands for hard assets, low obsolescence, and that sort of suggests a defensive real assets focus. So you've got sectors like energy, telecommunications, transportation, utilities, ones that are seemingly resistant to AI disruption. Jeremy, is that something that UK wealth managers have been looking at sort of significantly?
Well, it's interesting, John, because we actually read a piece on this earlier this week, spoke to people like HSBC, Asset Management's head of real assets, and it was actually very well read by our audience, which kind of showed me that there's a lot of interest in this as a theme. I think among our particular audience, it's lots of investment managers, discretionary fund managers in the UK. There's been quite a lot of frustration in recent years about the dynamics around US stocks and US tech stocks. They've kind of continually been highly valued, on some metrics, but have kept performing. And so I think people are quite keen to seize on alternatives to that, things where they might be able to add value, because it's quite hard if you're buying active funds. Unless you're allocating to tech funds specifically, I think it's quite hard to kind of add value as a multi-asset manager when it's giant tech stocks that are driving all the performance.
Yeah, you're just sort of tracking the index seemingly there.
I don't know if you agree, David, or if I'm being unfair.
No, I think I kind of agree.
You kind of agree.
And what we're really talking about is industrials and companies that make stuff, right? Now, strangely, we were already overweight industrials. And some of those companies, Caterpillar, for example, is up nearly 200% in the last couple of years. So some of these stocks have moved already. And
so have you been moving a bit back the
we're
other
trimming,
way
We're
now?
trimming.
You're
though,
trimming, okay.
Telcos is super interesting, right? Because telcos were part of TMT. Those of the viewers who have a certain age will remember that telecoms were the Nvidias of the late 90s anyway. So I think, again, we talk about SpaceX. SpaceX could be a disruptor to some of those telcos. So we do like some telcos, but they're also linked to the data center build-out. Singapore Telecoms, for example, has a data center business and is doing quite well. And so all of these things are still interlinked, in my view. So the industrials that are doing well are linked to the AI infrastructure story. So they're it's not as diversified. It's not a barbell, actually. It feels like the entire global equity market is moving on one theme. and people are not diversified. And actually, it's quite hard to diversify because anything that's not in that theme is underperforming. And we can see this coming, and it's how much do you want to participate? And that's the big question we're asking ourselves every hour of every day.
So is there anywhere to hide, really?
Well, I think there is, but you've got to be brave. You know, you want to be buying some of those companies that the market has said had finished. Now, of course, some of them might be, so this is not easy, but it shouldn't be easy, right? To outperform and create alpha, you've got to make the hard decisions. Do you go out and buy Accenture? Do you go out and buy Booking.com? Do you go out and buy these other platform businesses?
Supposed AI losers.
The AI losers. I mean, we used to have recovery funds. Do you remember those days? They kind of didn't recover. But maybe this is the time for recovery funds again, and looking at those companies, Intuit, and all of these software companies, for example, and data companies that have been so badly hit. Some of those will recover. They will be nimble enough to change their business, and you will probably make a lot of money from them. But you're probably going to need some patience, and that is in short supply.
Excellent. So that's all we have time for today. Big thanks to our production team today, and thanks to you, Joe, David, and Jeremy. Great to speak to you all.
Thank you.
John.